Imagine it's late at night. The stock market has closed, but investors around the world are still searching for answers. Some are looking for the next Nvidia. Others are trying to decide whether to buy, hold, or sell their favorite stocks. Traditionally, investors turn to financial advisors, Wall Street analysts, and investment research firms. But today, a new player has entered the game: artificial intelligence. AI is changing almost every industry, and finance is no exception. Millions of people now use AI tools to summarize earnings reports, analyze company fundamentals, compare businesses, and even generate investment ideas. Two of the most popular AI systems in the world today are ChatGPT and Claude. Both are powerful language models capable of processing large amounts of information and presenting it in a way that is easy to understand. But when it comes to stock analysis, which one performs better? This question is becoming increasingly important because retail investors are looking for tools that can help them make smarter decisions. The promise of AI is exciting. Imagine being able to ask complex investing questions and receive detailed explanations in seconds. Imagine comparing companies, understanding risks, and reviewing financial statements without spending hours reading reports. That is exactly why AI has become such a hot topic among investors. However, there is a major difference between using AI as a research assistant and using AI as an investment advisor. AI can help organize information, explain concepts, and highlight potential risks, but it cannot predict the future. Markets are influenced by economic conditions, interest rates, consumer behavior, competition, government regulations, and unexpected events. Even professional analysts with decades of experience make mistakes. Therefore, the goal of this video is not to determine which AI can predict stock prices. Instead, we want to find out which AI provides better analysis, clearer reasoning, and more useful insights. To make this comparison fair, we will imagine that both ChatGPT and Claude are given the exact same challenge. We ask them to analyze a company that investors know well. We request information about revenue growth, profitability, competitive advantages, risks, future opportunities, and overall investment considerations. Then we compare how each AI responds. The first thing many investors notice when using AI is the quality of explanations. Financial reports can be difficult to understand. Terms such as operating margin, free cash flow, earnings per share, and return on equity often confuse beginners. A useful AI should be able to take complex financial information and explain it in simple language. This is one of the most valuable benefits of artificial intelligence. Instead of spending hours trying to understand technical financial terminology, users can ask direct questions and receive understandable answers. When comparing ChatGPT and Claude, one important category is clarity. Investors need information that is organized and easy to follow. Long paragraphs filled with technical jargon may sound impressive, but they are not always helpful. The best analysis often comes from presenting information in a structured way. For example, breaking analysis into strengths, weaknesses, opportunities, and risks allows investors to understand a company more quickly. Another important factor is depth. Some AI systems provide short summaries, while others provide detailed explanations. Investors often want more than a simple overview. They want to know why revenue is growing, what competitive threats exist, how economic conditions may affect future performance, and whether management is executing effectively. The ability to provide deeper analysis can make a significant difference. Risk analysis is another area where AI can be useful. Many investors focus heavily on potential gains while ignoring possible downsides. Experienced investors understand that risk management is just as important as identifying opportunities. A strong analysis should discuss not only what could go right, but also what could go wrong. This includes competition, changing regulations, economic slowdowns, supply chain challenges, and valuation concerns. One of the reasons AI has gained popularity is speed. In the past, researching a company could take days. Today, investors can ask AI systems questions and receive responses almost instantly. This efficiency can save time and improve productivity. However, speed alone is not enough. Accuracy and reasoning are equally important. Fast answers are only valuable if the underlying analysis is logical and balanced. Supporters of ChatGPT often praise its ability to explain complicated concepts in a clear and conversational way. Many users appreciate its structured responses and educational style. Meanwhile, supporters of Claude frequently highlight its detailed reasoning and ability to produce comprehensive discussions. Both systems have strengths, which makes this comparison especially interesting. As artificial intelligence continues evolving, investors are beginning to ask a bigger question. Could AI eventually become a standard tool for investment research? In the future, it may become common for investors to use AI alongside traditional research methods. Rather than replacing human judgment, AI could act as an assistant that helps organize information and identify important factors. The most successful investors may be those who learn how to combine human decision-making with AI-powered research. Before we compare specific examples, it is important to remember that neither ChatGPT nor Claude should be viewed as a replacement for professional financial advice. AI systems generate responses based on available information and patterns. They do not possess perfect knowledge, and they cannot guarantee investment outcomes. Markets are unpredictable, and every investment involves risk. Responsible investing requires independent research, careful thinking, and an understanding of personal financial goals. With that foundation established, we are now ready to begin the head-to-head comparison. In the next section, we will present both AIs with the same stock analysis challenge and examine how they approach the task. We will look at their reasoning, their ability to identify risks, and their overall usefulness for investors. The results may reveal surprising differences and provide valuable insights into how artificial intelligence is transforming the world of investing. Now that we understand why investors are turning to artificial intelligence, it's time to begin the real challenge. To make this comparison fair, we're going to imagine that both ChatGPT and Claude receive exactly the same assignment. Neither AI gets extra information. Neither AI gets special treatment. They are asked the same question, given the same company, and evaluated using the same standards. The company we'll focus on is one that almost every investor knows. A company that has become one of the most influential technology businesses in the world. A company that has transformed industries and generated enormous returns for shareholders over the years. For this challenge, let's imagine we're analyzing NVIDIA. NVIDIA is an interesting choice because it sits at the center of one of the biggest investment stories of the decade: artificial intelligence. Its chips power AI systems, data centers, cloud infrastructure, and advanced computing applications. Investors have watched NVIDIA's stock rise dramatically as demand for AI technology exploded around the world. When investors analyze a company like NVIDIA, they usually ask several key questions. Is revenue growing? Are profits increasing? Does the company have a competitive advantage? What risks could threaten future growth? Is the stock overpriced? And perhaps most importantly, what could happen over the next 5 years? Let's imagine that both ChatGPT and Claude are asked to answer these questions. The first category we'll examine is business understanding. A strong analysis begins with understanding how a company actually makes money. Surprisingly, many investors buy stocks without fully understanding the underlying business. They know the company name, they've heard positive headlines, and they see the stock price rising. But they don't always understand the business model. A good AI should immediately explain NVIDIA's core business. It should describe how the company designs advanced semiconductor chips, how those chips are used in gaming, artificial intelligence, cloud computing, and enterprise applications, and why customers are willing to pay premium prices for its products. When evaluating AI responses, investors should pay attention to whether explanations are clear and organized. If an AI simply throws out technical terms without context, beginners may become confused. The best explanations make complex topics feel understandable. The second category is financial performance. This is where many investment decisions are made. Investors want to know whether a company is growing or slowing down. They want to understand revenue trends, profit margins, and overall financial health. A useful AI analysis should explain not only that revenue is increasing, but also why it is increasing. Is demand growing? Is the company gaining market share? Is a new product driving sales? Understanding the cause behind financial performance is often more important than simply looking at the numbers themselves. One of the biggest mistakes investors make is focusing only on recent results. Great investors think about the future. That's why the next category is growth potential. Growth potential is where things become interesting. Investors aren't buying the past. They're buying expectations about the future. A company that performed well last year may struggle next year. Likewise, a company facing temporary challenges may become a future success story. This is where AI can provide valuable insights. By examining industry trends, competitive positioning, and long-term opportunities, AI can help investors understand what may influence future growth. For NVIDIA, this could include artificial intelligence adoption, cloud computing expansion, autonomous vehicles, and other emerging technologies. However, there is an important distinction between analysis and prediction. Investors must remember that nobody knows exactly what will happen. Not Wall Street analysts, not hedge funds, not AI systems. The goal isn't to predict the future with certainty. The goal is to identify possibilities and understand risks. Speaking of risks, this is often where weak analysis becomes obvious. Many investment discussions focus almost entirely on positive outcomes. Investors hear exciting stories about innovation, growth, and future opportunities. But experienced investors understand that every opportunity comes with risks. A strong AI analysis should discuss competition. It should examine what happens if demand slows. It should consider regulatory changes. It should explore economic downturns and potential market disruptions. For NVIDIA, competition from other semiconductor companies represents an important risk factor. Technology changes quickly. Today's leader isn't guaranteed to remain tomorrow's leader. Investors need to understand these possibilities before making decisions. This brings us to another critical category: balance. Some AI systems tend to emphasize positive factors. Others may focus more heavily on risks. The most useful analysis usually presents both sides fairly. Investors benefit from seeing optimistic scenarios and pessimistic scenarios. Imagine an investor who only hears positive news. They may become overly confident and take unnecessary risks. On the other hand, an investor who only hears negative information may miss attractive opportunities. Balanced analysis helps avoid both extremes. Another area where AI can be helpful is simplifying complex financial information. Many earnings reports contain hundreds of pages. Reading them requires time, patience, and experience. AI can summarize important points and highlight key developments. This doesn't eliminate the need for research, but it can make the process more efficient. For retail investors with full-time jobs, this advantage can be significant. Instead of spending hours reviewing documents, they can use AI to identify important themes and then perform additional research on the most relevant topics. As artificial intelligence becomes more powerful, many investors wonder whether AI could eventually outperform human analysts. It's an interesting question, but perhaps it's the wrong question. The real value of AI may not come from replacing humans. Instead, it may come from enhancing human decision-making. Investors who combine AI-generated insights with independent thinking may gain the greatest advantage. This challenge between ChatGPT and Claude isn't about declaring one AI perfect and the other useless. It's about understanding how different systems approach analysis, reasoning, and communication. In the next section, we'll examine how each AI handles valuation analysis, competitive advantages, and investment decision-making. We'll explore whether one system provides deeper reasoning, whether another offers better explanations, and which approach may be more useful for long-term investors. Because when real money is involved, the quality of analysis matters more than ever. Valuation, competitive advantages, and the real test of AI analysis. As we continue our comparison between ChatGPT and Claude, we've already explored business understanding, financial performance, growth potential, and risk analysis. Now we arrive at one of the most important parts of investing: valuation. A great company is not always a great investment. That statement surprises many beginner investors. When people hear about successful businesses, they often assume buying the stock is automatically a smart decision. But investing doesn't work that way. Even the world's best company can become a poor investment if investors pay too much for it. This is why valuation matters. Imagine two identical houses on the same street. One costs $300,000 and the other costs $3 million. Even though they're the same house, the investment decision changes dramatically based on price. Stocks work in a similar way. When investors analyze companies like Nvidia, Apple, Microsoft, or Amazon, they don't simply ask whether the business is strong. They ask whether the current stock price reflects future expectations. This is where artificial intelligence can become extremely useful. When asked about valuation, both ChatGPT and Claude should explain that investors often use metrics such as price-to-earnings ratios, revenue growth rates, profit margins, and future earnings expectations. However, understanding valuation isn't just about numbers. It's about expectations. The stock market is constantly trying to predict the future. If investors believe a company will grow rapidly for many years, they may be willing to pay a premium price today. But if growth slows, those expectations can change very quickly. This is one reason technology stocks often experience large price swings. A company may report strong earnings and still see its stock decline if investors expected even better results. Conversely, a company may report average results and still see its stock rise if expectations were low. This creates an interesting challenge for AI. Can artificial intelligence explain not only the company's current situation, but also the expectations built into the stock price? That ability separates basic analysis from deeper analysis. Now let's move to another important category: competitive advantage. Every successful company has competitors. The question is whether a company has something that competitors struggle to copy. Investors often refer to this as an economic moat. Just as a moat protected castles from attackers hundreds of years ago, a business moat helps protect a company from competitors. For Nvidia, its competitive advantages might include technological leadership, strong customer relationships, advanced chip design expertise, and a powerful ecosystem of software and hardware products. A useful AI analysis should explain why these advantages matter. It's not enough to say a company is successful. Investors need to understand why it's successful. If success comes from a temporary trend, future performance may be uncertain. If success comes from durable competitive advantages, long-term growth may be more sustainable. This is where AI systems can show significant differences. Some analyses focus mainly on facts and statistics. Others focus more on strategic thinking. The strongest analysis usually combines both. Numbers tell us what has happened. Strategy helps explain what might happen next. Now imagine asking both ChatGPT and Claude the following question: what could threaten Nvidia's position over the next decade? This is a fascinating test because it forces AI to think beyond recent success. Strong analysis might discuss increasing competition from semiconductor rivals. It might examine technological disruption. It could explore government regulations, international trade restrictions, or changing customer demands. Investors often become so focused on success stories that they forget every dominant company eventually faces challenges. History provides many examples. At different points in time, companies appeared unstoppable. Some remained successful. Others struggled as industries evolved. This is why critical thinking is essential in investing. And it's also why AI-generated analysis should always be viewed as a starting point rather than a final answer. One of the most valuable qualities in any investment analysis is intellectual honesty. The best analysts are willing to admit uncertainty. They recognize that investing involves probabilities rather than guarantees. If an AI confidently claims that a stock will definitely rise or definitely fall, investors should become cautious. Financial markets are too complex for absolute certainty. Economic conditions change. Technology evolves. Consumer behavior shifts. Unexpected events occur. The future is always uncertain. A high-quality analysis acknowledges these realities. Another important category is communication. Many investors underestimate the value of clear communication. The smartest analysis in the world isn't very useful if nobody can understand it. This is where AI has created enormous value. Complex financial concepts that once required years of experience can now be explained in simple language. Terms like free cash flow, operating leverage, earnings growth, and return on invested capital become easier to understand. For beginner investors, this educational benefit may be one of AI's greatest strengths. Instead of feeling intimidated by financial reports, users can ask questions and receive understandable explanations. As a result, more people are learning about investing than ever before. But here's an important warning. Understanding an explanation doesn't automatically mean the analysis is correct. AI systems can sometimes sound extremely confident even when discussing uncertain topics. This is why verification remains important. Smart investors cross-check information, review multiple sources,